Alright guys, we'll go ahead and get started. Again, these group lessons on Thursdays are pretty open, so if you have any questions, feel free to type it in the premium chat or you can raise your hand. The general topic we're going to go over is position sizing and risk management. I had a couple people DM me and want to go over that, so we'll go ahead and get started. And again, if you have any questions, just type in premium or raise your hand. So, and again, this is also being recorded, so if there's anything that you obviously can't see on my screen, you'll be able to watch it back. So, generally speaking, with position sizing and risk management, everyone is obviously going to trade their plan. But let's talk about when we're switching through stocks in the morning. So obviously, there's usually several gappers that we're looking at. For instance, and again, if you want to follow along on your TOS or whatever you're using, that would be a good visual as well. So let's take a look at VRM. VRM right now, the high is 155. So market open, this thing was like $1.20. That's super cheap. We generally don't trade. We really don't like to trade stocks under $3. We do here and there. We really like to see stocks at or around $5. But let's take VRM for example. If we were to trade VRM, it is very cheap. So let's say that we're used to trading, $5 stocks. And let's say that you are trading with a $5,000 account. In the market conditions currently, you may not want to trade with your entire account. So let's just say you're going to trade with half of that. So we're looking at a $5 stock, generally speaking. We'll come back to VRM in a second. If you're using $2,500, which would be half of your $5,000 account, and it's a $5 stock, you would be buying about 500 shares. And again, we flip through stocks, we trade different things, sometimes very quickly. High momentum gappers move like that. So let's say we go from trading that $5 stock to VRM, which I have on my screen here. Again, it was about $1.20 this morning. If you want to trade with the same amount of your account, well now this stock is much cheaper. If you were to take only 500 shares, which is the amount you took on the $5 stock, on this stock at 120, well that's only 600 shares. And if you want to use the same amount of your account, let's say, again, a $5,000 account, so you're using $2,500, which is half, going from that $5 stock to now this $1.20 stock, to use the same amount of 2,500, you would be taking over 2,000 shares. So that's what you have to be cognizant of when we're flipping through stocks, and this plays directly into position sizing and risk management. So that $2,500 that allowed you to buy 600 shares of that $5 stock, the same amount of money, $2,500, on a stock, let's say VRM, that's $1.20. I mean, that's almost 4 times the amount of shares that you could buy for the same amount of money. Now, I'm not saying that you should always do that, because cheaper stocks can oftentimes be more volatile because it takes much less capital. It doesn't need anywhere near the liquidity that a $5 stock would need to move. So again, you have to take into these account when you're deciding both position size and risk management. So yeah, you're probably going to take a bigger position size when we're talking about the quantity of the stock, but not necessarily the overall money spent. Because again, if you take $2,500 and you use the same amount to buy a $5 stock compared to a $1.20 stock, you're going to buy way more shares of the $1.20 stock. But again, we do want to manage our risk, and we know that much cheaper stocks can move much quicker with much less liquidity in them. So a 10,000 share seller is going to affect a $1 stock tremendously more than a 10,000 share seller would affect a $5 stock. So we want to keep these things in mind when we're flipping through stocks and we're changing what we're trading, again, sometimes quickly, because these things move very fast. Yeah, if you want to either
CRE.
type your question in chat or just raise your hand, I can bring you up and you can ask it. And so this goes for everything. And again, this all starts with you trading your plan. Yes, we have ways that we do things, and we're obviously teaching you guys in a certain manner the ways that we do it and why we do it and why we don't do certain things. But at the same time, in every single trade, you need to have a plan, and more importantly, you need to trade your plan. Because if you go into a trade, A, without a plan, or B, simply following what someone else is doing in real time, again, we're trading these high momentum gappers, and in this specific situation, a very cheap one in VRM, things can happen very quickly, and oftentimes it can happen even
WBS.
quicker than I or Jason or anyone
TAR.
can say, okay, I'm selling. In the time it takes for me to say, okay, I'm selling, that thing, I mean, we've seen this week several dumps. In the time it takes for me to say, okay, I'm selling here, I mean, that thing could have dropped 20, 30, 50 cents, which is a tremendous amount, even in a $5 stock. But I mean, in a $1.20 stock, if it drops 20, 30 cents, if we look right here on this drop, this happened in, around 7 seconds. This went from 155 to 143. I mean, 12 cents in a $1.20 stock, that is huge percentage wise. So again, you don't necessarily want to focus on just the quantity of shares you're buying. You want to focus on the amount of your account you want to use. Always, let's say you're just always going to use that amount. You need to manage your risk in, and it goes both ways, not just for cheap, but more expensive stocks as well. I do see a question. Let me finish this thought here. 1 second. This goes both ways. So we're talking about, let's say, a $5 stock in comparison to a $1.20 stock. It goes the other way too. If you're trading with a $2,500 account and you buy a $5 stock, let's say it's 600 shares. If you're trading with a $2,500 account and we go and trade a $12 stock, well, that's only 200 shares. So you have to assess what your plan is. I personally would say, okay, today I'm going to trade with this amount of my account and adjust accordingly to the stock that we're trading, whether it's much cheaper or much more expensive. Down your account right now. Any tips on how to come back? It's frustrating. First off, I'll say you're not alone. I won't, not even just in this group lesson, not even just in prop traders as a whole, but I mean, the world, like the market is really bad right now. These are very poor market conditions, and it's very hard to be successful. What I'll say to that is, number one, I would lower your position sizes. So I obviously don't know the size of your account or what you've been trading with, but lower your position sizes, maybe even cut them in half. Your winners are going to be smaller, but so are your losers. And that can also help you to not be as emotional in trades, both on winning and losing. Lowering your position size is going to help you get confidence back. Number one, it's going to help you be less emotional. Number two, and it's going to help you start to build your account back up. It's going to be slower than obviously what it would be if you take big position sizes, but we're not looking for home runs, especially in this market. We need to hit base hits, we need to be consistent, and we need to have winning ratios. That's what's going to help you kind of turn around and get your account back, because again, none of us are going crazy in this market. This is a great time to learn, and as you adjust to not only the market conditions but also your situation with your account, as you start to build that up, you're going to learn a lot that's going to help you when the market turns around. Yeah, I mean, in that case, again, I would obviously do, if you can, the things I mentioned. I wouldn't try to like home run a lot of stuff to get money specifically for a membership. We don't want to put anyone in a financial bind. So that, and again, that's why this is a little sidebar, that's why we do the application based process, because we don't not only want to have people come in that are good for us, but we want it to be good for you. We don't want someone who has $20 to trade with to, break their account to get a membership and come in and then be stressed while they trade and not be successful. Like, we don't just want to take people's money. We want to bring in people who are excited about trading, positive, like-minded individuals, and we're building a community. So if you can't afford the membership, that's okay. Like, the Discord is free. We have free lessons. He does TikTok lives every day. Like, just continue to show up in whatever capacity that you can, and you're going to continue to learn.
USER.
So that's kind of the basics when it comes to position size and risk management. I'll also throw in, which we've talked about a little bit, but this also goes into risk management, is winning ratios. Winning ratios are going to help you be successful overall. It's going to help you get more consistent, and it's going to help you grow your account, because as long as you practice winning ratios, your winners 9 times out of 10 should always be bigger than your losers. And even if you have more losers than winners, if you're practicing winning ratios and your winners are bigger, you can even have more losers than winners and still be profitable and still grow your account, because you're practicing risk management and you're using winning ratios. Again, I'll use a simple example. If you go into a stock, let's say it's a $1.25 stock. When you enter that trade, you should already have a plan. Let's say that plan is to make 25 cents. That's your plan going into it. So you enter that trade. If it gets to $1.50, which is your 25-cent mark, you sell a partial, and you let the rest ride. If it keeps going, that's amazing. If it doesn't, stop loss at break even. Let's take the same trade. You enter a trade. It's $1.25. Your goal is 25 cents, which would be $1.50. You're only going to risk half of what you want to gain. So if you're looking to make 25 cents, you're only going to risk 12 to 13 cents. And sometimes you can do mental stop losses, but in these market conditions, especially if you have a smaller account, if you're trying to learn, all these things kind of roll in. You stick to that. It's going to help you. Yes, you're going to get stopped out of trades more often than not, and sometimes you're going to get stopped out and it's going to rip, and you're going to be really upset, and you're going to get FOMO. It happens. It's happened to me. It still happens to me. But if you go into a trade with a plan and you practice winning ratios, you will be profitable. Okay? Again, that goes into risk management. We talked about position size. All this stuff rolls into your trading plan, which again is specific to you and which you should have coming in and sitting down at your computer every day. I have lots of small winners, but oftentimes have decent sized losers. Can you explain how to set stop losses? Yeah. What do you use TOS, or what brokerage do you use to trade specifically? Yep. So we just kind of mentioned, I didn't even see his question, but I answered it inadvertently, but I'll go into it just a little bit more. In reference to stop losses, obviously we just talked about when you should have them. Specifically, how, if you don't know, if you trade on TOS or whatever you trade on. I like to use the ladder and to set a stop loss. Right now on my screen I have VRM. Let's say I'm in this trade at 158. Let's say I have 100 shares. I'll come down here. This is at 158. Let's say I entered at 150. I'm trying to get to 175, so I'm going to risk, 12, 13 cents. So I'll come down here and I'll set a stop loss, 36, 35, boom. See, it says stop. Obviously, I don't have any shares, so it's thinking I want to short, but that's how you do it. You just set it right there. And then, again, if you've already taken a partial, cool, let it run. Stop loss at break even. If you haven't yet, set that stop loss. If it hits, cool, that sucks, but on to the next one. Does anyone have any questions regarding risk management or position sizes, or again, anything that you want to ask or know? This is an open setting. We're here for you guys, so. answer any questions you have. Try to teach you anything I can. Does that change with positive or negative news catalysts? It's going to be rare that news comes out, whether positive or negative, while you're in a trade, because again, in these high momentum gappers that we trade, we're oftentimes in and out within a minute, 2-3 minutes. So it's very rare a positive or negative news catalyst is going to affect the trade while you're in it. If something comes out and because of that you're going to get in it, while that can help you, whether it's to the upside or downside, I would still go in. I would still trade your plan, and if that helps whatever direction you're trying to go in that trade, again, whether you're long or short, then great. But I would still go in with a plan. I'm going to try to bring you back up here.
Hey, what's up? What's going
Hey,
on?
there we go. How are you?
Good, how you doing?
Good.
Yeah, sorry, my mic wasn't working
Oh, it's all
earlier.
good.
I just have a quick question. Like,
Sure.
I'm fairly new. I have a lot smaller account. It's around like 1,000.
Okay.
So, I was wondering about risk management because since I have a smaller account, my risk size would obviously have to be a little larger. I was wondering, just like your thoughts on that. I should be risking.
So yeah, with a
That.
smaller account like that, you can go one of two routes. One, you can just kind of do what we've talked about. Again, and this is going to go into whatever your trading plan is. The other option is with a smaller account, it's obviously much harder to grow over time. So this goes into risk management. So this is 100% on you, what you decide to do. But to grow a smaller account, a lot of times it is better to kind of go all in on these trades. So if that would be your trading plan, I would be much more selective of what you're trading. Only trade like really good setups or something that has like a really good catalyst, which we just kind of talked about. But just know that if you do go that route, if you obviously succeed on the trades you enter, you're going to grow your account much faster. But you obviously have the other side where if you don't win on a trade, you can obviously lose much more. So generally speaking, account size doesn't play a role in what we've talked about generally with having a plan, winning ratios. You should still always have that. But in a smaller account, in your situation, again, I don't know your situation and whatnot. If you can afford to lose it, because again, we're trading here, this isn't anything guaranteed, and you may lose in a trade, obviously. So if you enter a trade with a large portion of your account, if you win, yes, it's going to grow more and quicker, but you can also be on the other side of it and lose as well.
Yeah, I get that. Thank you for that. And
Yeah.
just another one.
Sure.
It's not like I don't have the money to grow my account. Like I could deposit more.
Mhm.
I was just wondering your thoughts on that. Just see how it goes for now, and then wait to deposit more, or how should
Yeah,
I?
so you said you're a little bit newer. Obviously, you can paper trade. I
Yeah,
love paper trading.
yeah, that's what I'm doing right now.
Yeah, that's a great idea. Not only can you see what we're doing in real time, but you can really start to understand how charts move and how trades happen and how they develop. And you can really see psychological resistance lines. And you can do all this stuff and really focus on it instead of only entering a trade and your eyes are locked on your P&L, which can happen. So, again, if you have, I'm not going to say you should or shouldn't do anything. This is obviously your plan. This is your situation. But if you have, extra money, if you will, then, and you're comfortable with it, then I'll just say that it is much easier to grow a smaller account using majority of it in trades. But definitely, trade with risk management and try to keep winning ratios and whatnot. But again, paper trading, and if you can, entering trades with, if it's $1,000, let's say, a larger portion of your account.
All right, thank you.
Yeah, absolutely. Down around 500. You still have 15. It's really up to you, Nico. Kind of what we just talked about with him. Again,
LABU.
this is situational
AZRE.
specific. If you have more money you can put in, then that's
CVNA.
okay. But if you're going to kind of do what we talked about, which is lower your position size, really hone in on winning ratios, then if you want to just keep that $1,500 in there, then maybe only trade with
PACB.
500 of it, or 1,000 of it. You don't have to use all of your account in every trade in your specific situation, which we've talked about a little bit. If you want to lower your position size, practice winning ratios, really kind of hone in on winning trades and getting more consistent. And then
DNA.
let's say, so you're down 500, let's say you build that 500 back up. If you get more comfortable and or the market conditions are better, then you can again start taking bigger position sizes and try to grow your account again from there. Kai says, I just joined and have not started trading yet. I wanted to start my account with 25K. Is that not available? Should I put the amount in what trade? So yeah, you can open an account with 25K and start trading in it. If it's 25K on the dot, you can open it as a cash account and trade in it that way. Because if you, let's say you deposit 25K and you have a margin account, we'll just say with TD Ameritrade, which is Thinkorswim's brokerage. For example, if you take one trade and you lose and now you're only 25K, well, now you get flagged for PDT, which your account does get one lifetime removal, but again, that can happen in literally one trade. So if you're going to start trading,
CNTX.
I would either A, you can use 25K and make it a cash account,
LABU.
or B,
GTLB.
just go in with, even less than 25K, make it a margin account,
AFRM.
because obviously then you can trade on margin. You'll be under PDT, which is the 3-day trade rule, obviously. But so my advice overall, to answer the question quickly,
DNA.
if you have 25K or less, I would either open a cash account with it or open a margin account with less than 25K and build it up.
LABU.
And then once you have 26, 27, something like that, then open it up, make it a margin account, and you can trade free.
AFRM.
Yeah, I agree, Undertaker, for sure. That's a tough spot to be in, the 25K thing. So, yeah, it's tough if you have exactly 25K or even like right on the edge, because it's so stressful and like one trade can put you under that. And then,
HLG.
so just put more than 20. Kai, if you can and you want to be over PDT, then yes, I would say put in more than 25K.
GTLB.
28, 29, even 30K, like a 5K buffer would be perfect. You wouldn't really have to worry.
CNTX.
But yeah, if you only have 25K, I would
AVYA.
either open a margin account and not put 25K in it yet, or put 25K in it, make it a cash account, and then grow it till you have that buffer, and then you can switch it over to margin and not have PDT to worry about.
AFRM. LABU.
Let's see your hand. I'll bring you back up here 1 second.
BAND.
AVXL.
Go ahead with your
So,
question.
I just it's not really related to risk management. It's just about the paper trading.
Yeah.
Yeah, so obviously with paper trading you could short and long. I was wondering if I should stick to just like one and not try to move like back and forth.
Between paper
Because-
trading and live trading, or longing and shorting?
Longing and shorting.
I mean, if you're paper trading, you obviously have nothing to lose, and you should take advantage of that to learn in every way you can. There's really no detriment to longing and then shorting on paper, because again, you're not losing money. You're only gaining knowledge. So I would definitely not shy away from doing only one or the other. I would focus on doing both of them, but doing them as if you were trading it with real money. So go into every trade with a plan. Again, practice winning ratios and practice in that trading account and see in real time what
TROV.
would happen if you were trading with your money. That's going to be the best way to learn. It's obviously less stressful and you're not making or losing money, but you're seeing, number one, how the stocks move, how the trades develop, and two, you're going to be less emotional because it's not your money, but you can even see like how you're going to react in those situations.
Mm-hmm. Okay. Thank you.
Yeah, you're welcome. Let me check the chat for questions one more time here. Answered that one. Answered that. Yeah, being at or around 25K is really hard because the second. So if you have 25K and you enter a trade and you lose on it, if that trading day closes and your account is under 25K, you're immediately flagged as a pattern day trader.
DYN.
And again, you can get that removed once, but
TRV.
it's once for the lifetime of your account. So it's tough. I definitely wouldn't want to put 25K in an account, make one trade, lose, and right then and there use my one lifetime removal. You plan on paper trading study? That's a great idea. Even people who have 25, 30, 50K, utilize that paper trading software. It is so underused and, in my opinion, undervalued. You're trading in real time. If you have real time data, which if you don't, there's a video in the lessons. Definitely get that. You can trade alongside us live every single day, just like you would in your own account. But you don't have to risk your money. You take emotion out of it, and you can really hone in on what's happening and why and how things move. And again, psychological resistance signs, candlestick patterns, like you can learn all this stuff while trading in real time. It's just, there's so much value, in my opinion, in paper trading. Yeah, that's a good idea. So that's what I'm doing right now. I'm trading with like not even 10% of my account right now because the market conditions are just terrible. So my winners are not big at all, but I'm okay with that. All right, I see 2 hands raised. We'll get these 2 questions answered, and then we'll get you guys out of here to enjoy your day.
Yo, hey Corey.
Hey, how are you?
I'm good.
Good.
Y'all doing all right?
Absolutely.
Okay, so it kind of follows up on what you were just talking about the PDT, but I guess this is for clarification. So let's say that I'm above PDT and I make like 8 trades throughout that day, and then my very last trade puts me below PDT, and then I close below PDT. Is that what you mean by I immediately get flagged as a pattern day trader?
Yeah, so you can make 1 trade or you can make 50 trades in a day. If by the end of that day your account closes with less than 25K in option buying power, which, well, technically they're going to go off the net liquid, but if you have less than 25K available for trades in your account at the end of the day, you will get flagged as pattern day trader.
And that's because you've made multiple trades throughout that day and not just sticking to the 3 and a 5-day rolling period.
Well, no, that's just because you now have less than 25K of buying power in your account. Again, that day you can make 1 trade or you can make 50. If when that day closes, you have less than 25K, the next day they're going to flag your account.
GTLB.
Okay, so then are all of us, so we're flagged as pattern day traders if we're under 25K automatically. So then is that true?
So you're not flagged as a pattern day trader because you're under the 25K. So you're just under the PDT rule.
VEDU.
Okay, that makes sense now.
Yeah.
That's good clarification.
Yeah, no problem.
Thank you.
Absolutely.
AVYA.
Got one more hand raised. I'll invite you up here to speak.
AFRM. GTLB.
Yeah, sorry, last question.
No, go ahead.
So with like
BHAT.
just the paper trading and the margin cash account,
MARA.
I thought you can make like a cash account for Weeble and you won't have to deal with the PDT rule. Like how would that work?
So cash accounts, you technically do not have to deal with PDT, but a lot of people think that's a way to get out of it. In my opinion, it's basically the same thing because, try to explain this quickly. Let's say you have $1,000 in your trading account and it's a cash account, if you make a trade, let's say you use the whole $1,000, you now have to wait usually 2 business days for that cash to settle before you can use it again. So
Oh wow.
yeah, so let's even say that you break it down. A lot of people will open a cash account, and let's say they have $1,000. They'll use on this day they'll use 200. On the next day they'll use 200 more. So that's 400 of the 1,000. That 400 has to settle. Each trade, let's say of $200, has to settle for 2 days. So you still have $600 to trade with. So technically, if you break it down, you can trade more than 3 times in a week, but you would have to use less of your account. So technically, no, you're not under PDT, but there still is things in place that limit your trading in a cash account.
Okay. So I'm not planning on actually like live trading or anything like that for a while until I actually like get it down or whatever. But when I do get to that point, what would you recommend? Probably, I would say stay with the PDT because it teaches you lessons and all that type of stuff too.
Yeah, I mean PDT. A lot of us traders are like, PDT, I hate you. It's there for a reason. A lot of us don't like it, but it can, teach you lessons. Even if you're under PDT, I don't think there's a ton of reason to not have a margin account. Number one, you can short.
XOS.
You can't short on a cash account. Number two, if you want to, you can use margin. So let's say you have a $2,000 account. Well, now you can have a $4,000 account. Trading on margin is obviously much more risky, but I would still say to use a margin account.
Thank you.
You're welcome.
Have a good day.
Absolutely, you too. All right. Great lesson. I appreciate you guys showing up. I know your time is valuable. Hopefully I answered some questions that you had, or maybe even some that you didn't have. Feel free to DM me if you have any other questions. Obviously, you can DM Noah, Jason, Dagan as well. It was recorded. I will edit this and get it posted if you guys want to watch it back for any reason. Other than that, good trade today. We made some money. Continue to show up, be consistent, and continue to learn. And when the market turns around, which it will eventually, we're going to make a lot of money and we'll be successful. So, again, I appreciate your guys' time and hope you guys have a good day.